In terms of the trade situation right now, I think there are two considerations. Near term, there seems to be some willingness to negotiate on both sides. But I think the fundamental positions are very, very far apart, and that's where the difficulties lie, right? The fundamental position of China is that, yes, we will make any kind of a trade deal if that's what you want, but you cannot tell us or demand that we change our economic structure the way you see fit, that we change our economic development outlook for the next 20 or 50 years as you see fit. So that's where it goes. And the US and China both will have to give a little bit in terms of that, I think.
When it comes to your strategy for Asian markets, what are you doing then in this current environment? We do have Asian markets nicely firmer to end out the trading week.
Well, the markets, of course, responded to the fact that the trade negotiations seem to be, back on, and that's always been the pattern over the last several months. So there's, in that sense, nothing new. I would be very cautious about equities at this point because the volatility there has been very, very large, especially also here in Hong Kong, but of course also in the United States. On the other hand, when we're looking at other asset classes, I think it's very important to see that fixed income in Asia is a great opportunity and has not had the same swings that we've seen with regard to equities. So if you're looking for yield and if you're looking for a stable, more stable market, then go into the bond market, the corporate bond market in China, the corporate bond market in Southeast Asia.
You don't think, though, that the bond market overall is becoming a bit of a crowded space? Of course, we're seeing yields plumb record lows right across the world.
Well, it's crowded, certainly in the United States. 94% of all yield globally right now is in United States bonds, and the yields have been going down, so it's expensive and it's crowded. But that is not the case, definitively not the case in Asia, and I think that's where the value lies. I wouldn't say bond markets in general, but I would say in Asia you have great opportunities. You have the Bond Connect in Hong Kong that allows you to trade into Chinese bonds, and the yield there is somewhere between 3% and 5%. So what's not to like?
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.